So we are beginning today's class by looking at the exercise, and after we'll look at doing the postings to the ledgers, and then we'll see if we can look at the cash book. So the following information is about the question is Mason Enterprise for the month of January 2026. Your first, purchase 10 bags of cement at 200 per bag from Araba Limited. Fifth, bought goods from Araba on credit $5,000 subject to 10% discount. Purchase goods from Kwesi 100 buckets of oil paint at $20 per bucket. Return goods worth $1,000 from the purchases made on the 5th to Araba. So we are only preparing the purchases day book and the return outwards day book. So quickly, this is the purchases day book. Let's see what to do in there. So the first transaction is credit purchases. So we go into our purchase day, we put the date 1st January 2026. Under the particulars, that will be Araba Limited. But we need to acknowledge that we bought or we purchased cement. That's 10 bags multiplied by $200 per bag or per bag. So the multiplication will give us 2,000. Here we don't have to do any additions and subtractions or adjusting discount. So we put the total amount under the amount column as the net amount, 2,000. So this was what I was expecting from you. I think majority of you did it well. On the 5th, bought goods from Araba on credit 5,000 subject to 10% discount. So 5th January 2016, another Araba. This time the description of the item was not given, but we were told that it is subject to 10%. So we need to less the 10% discount. And that should give us 10% of 5,000 is 500. So if we subtract, we'll now get the net figure, which goes into the or under the amount column 4,500. Very simple. The next one was on the 15th, purchase goods from Kwesi. So the date will be 15th January 2026. We purchased goods from Kwesi, but the items were given 100 buckets of oil paint. So oil paint, 100 buckets multiplied by $20 per bucket. That should give us 2,000. So that one too has no discount or anything. So go straight away, 2,000. Okay. Please, under the amount column, you always need to put your currency. Very important. As well as under the details column. So those who are not putting the currencies there, that's why I didn't get the full mark. Okay. So the last one was the return goods worth 1,000 from the purchases made on the 5th. So this will go into return outwards book. So go to return outwards. And then put in the date, 19th January 2026. The details will be goods returned to Araba. But this is where I think some of you forgot to adjust the discount, because I hinted earlier that when you are looking at returns, always confirm from the previous transaction whether there was a discount or not. So we're told that the goods return was in connection with the 5th January transaction. On that 5th January transaction, there was a discount of 10%. So for this returns worth 1,000, we need to less that discount. So 1,000, we less, the discount was 10%. So 10% on 1,000, that is 100, giving us a net figure of $900. Okay. So this was a very short, brief question. I think majority of you did well. A few people were mixing things here and there. And then after you are done with your day book, remember I told you need to always get the total. The total is very important too. So under the purchase day book, the total I think will be 8,500. You underline this figure. Tell us what it is under the particulars column. So this is total credit purchases posted to purchases account in the general ledger. And of course, use the closing date 31st January 2026. So I was expecting you to do the summations or the total. Majority of you did that as well. And then you do same for your return outwards. It just happened, it's just one figure, but you still need to get the total. So the total will be 900. Then give us the narration under the particulars. So under the particulars, that will be total return outwards posted to return outwards account in the general ledger. Okay. So you do this, and I think you score say 15 or say 20 marks, right? Free of charge. So I think we are now good to go. Okay, so let's zoom into the postings. Now, when you are done with your day books like this, you need to post to the ledgers. Remember, the ledgers are the books where we do the debits and credits. So all the entries in your day books from the individual entries you made to the total. So you post each one and then later also post the totals. Very, very important. So let's look at how you go about the postings using this, the question I have. So if this is our sales journal, okay, this is our sales journal, you can see 1st January we sold to Kwesi, 5th January we sold to Amma, and then the totals. So what it means is that you have to post from the beginning the entry for this one, that's the sale to Kwesi, the entry for Amma, and then finally you also post the total. Now, it is very simple. This is a sales journal, so the individual debtors here, Kwesi, Amma, you need to open their account in the sales ledger. In the sales ledger, because they are debtors. Remember, we said the sales ledger is used to keep debtors account. Okay. Now the total which represents credit sales would be posted to the sales account in the general ledger. So even that one is stated here under the particulars. So let's scroll down and see how it is done. So first of all, let's pick Kwesi. So we'll go into the sales ledger, which is the ledger for the debtors, and then we'll open Kwesi's account like this. So in your exercise book, you just indicate sales ledger, okay? And then you open the account for who? Kwesi. Now, when you sell goods to a customer, what do? You debit the person. So you pick the date. So 1st January 2002. You put in that date. The narration is what? Sales, because we sold goods to Kwesi. And you put the amount there, the net amount. Okay. You do same for Amma, who is the next data in that book, right? So you do that for Amma. Open Amma's account, debit Amma with the 1,500 on the 5th of January. And so that is what you see here. So you would appreciate that. This will then get us to post Kwesi and Amma. What is left is the total. And like I indicated to you, the total will go to the sales account in the general ledger. So if we scroll down, you see that you put down the name of the ledger, general ledger. See general ledger, and then you draw the account for sales. Now here we are crediting sales because you know when you sell goods, you credit sales. But here we are using the total, so you don't need to write the individual names, Amma, Kwesi here. No, all of them together are debtors. So the narration or the details in the sales account is the debtors. And then you put the closing date, since that was the date on which you summed up the totals, as you see here. So that's how you do the postings. You post the individuals, then you post the total. If it had been the purchases journal, which let me go on to next. So if this is our purchases journal, here you see purchases. So this means on 1st January, we purchased from KK Limited. On 5th January, we purchased from Listowel. So these are creditors. So their account will be in the purchases ledger. So we are going to post these entries into the purchases ledger. And then the total will go to the purchases account in the general ledger. So the totals always go into the general ledger. You put it in that account. If it is purchases account. If it is sales account. If it is return invoice account. So take note of that. So like you see, you just write your purchases ledger, put the individual creditors, KK Limited, Listowel. And these are creditors. If we purchase from them, we credit the account. Okay. Then in the general ledger, the purchases account, we debit. Anytime we purchase, we debit. Please, any question up to this point? I don't think so. Then for the return invoice and return outwards, that is also simple because return invoice reflect debtors, or these are debtors who are returning back goods. And debtors already have their account in the sales ledger. So it will just go into the sales ledger to go and subtract, right? Because returns in a way reduces the debtors balance or debt. Okay. So for example, in what we did, let me go back to the sales. If it so happens that maybe there was return invoice from Kwesi, Kwesi's account is already in the sales ledger. So we'll post that return invoice into this account. And when customers return goods, we credit them. So you then put the date here. The details will be return invoice. You put the amount there. Okay, so the return invoice will also go into the sales ledger for the individual debtors. And the total will go into the general ledger, the return invoice account. Okay. And I think you apply same principles when you are posting from the return outwards. That one, the individual suppliers will go into the purchases ledger, right? Return outwards, what do you do to the account? You debit them. Then the total will again go to the general ledger. So the preparation of the ledger is very simple. Just write the heading sales ledger and put in the account, but make sure you are putting the right account in the right ledger. If you go and put a creditor's account in the sales ledger or under the sales ledger, you'll be marked wrong, right? So just know where to put what and you are good to go. I'll pause for questions. If there are no questions, then I'll continue. Professors, any question? Okay, no questions. Good. So watch out. This question that we just solved, you could have been asked to post to the ledgers. Okay. So let me use the pen to illustrate it, and then I think we are good to go. So for this purchases day book we prepared, you see, these are creditors. So Araba and Kwesi, they are creditors, right? So if we are to post to the ledgers, the ledger we need to open will be the purchases ledger. So you just indicate your heading or your title, purchases ledger. And then under that purchases ledger, you now open account for Araba Limited, Araba and Kwesi. Okay. So you are using your pencils, your pens and exercise book. So you use your ruler or your long or your straight edge. And then under the purchase ledger, you open one account for Araba Limited. You open the next account for Araba, and then open the next one for the last person, who should be Kwesi. And these are creditors. So if you purchase from them, what do? You are going to credit their account. So you put in the date, the details will be purchases, you put the amount there. That's all. Then the return inwards, the return outwards. That was in connection with Araba. So your return outwards will appear in Araba's account at the debit side, because when you return goods out to a supplier, you debit it. Now here, I didn't combine the Araba Limited and Araba because they are two different entities. The first one is Araba Limited, and this one is Araba. So please, also be careful with the naming. If it were to be Araba, fine, but we have Araba Limited and Araba. So do well to separate these accounts. Please, any question? Seems I'm doing the talking alone. Any question? Okay, there are no questions. So we can now zoom into the cash book. Okay, I think Amuzu has a question. So Amuzu, let's hear you.
Sir, please. Since we are always
please take it again. Please take it again. We didn't hear. I didn't hear you. I couldn't hear you.
After we've done everything for the sales ledger and the purchase ledger, we then have to record it into the general ledger.
Yes. So
we'll always be at the debit side of the account table, the T account.
I'm trying to get your question well. Please, if any of you got his question, you can repeat it for me. Or better, so Amuzu, take it again.
Sir, please, after drawing everything, we don't have to bring it back to the general ledger.
Do you
in
have
that case, in this table form, will it be at the debit side always?
So it depends on what you are posting and the entry you have to pass. Okay. So, but the underlying principle is that if you prepare your sales day book, okay, let me do this on a new sheet. If you prepare your sales day book, right, your sales daybook or your sales journal. Let me increase the font size so that you can see it. Okay, so if you prepare your sales daybook, this book records credit sales, right? Credit sales. So all the persons you have in this book are debtors. So if you are doing a posting, you are doing two things basically. You are posting to each debtor's account, and then you are also posting the total sales. Okay, so in the sales daybook, you have two main information. That is credit sales to each debtor, and then the total credit sales, the total. Okay, so the individual credit sales or the credit sales to individual debtors, you post them to the sales ledger. So when you open the sales ledger, you have account for Kofi, Ama, Esi. That's all your debtors who are in your sales table. You open for them. Now, in that account, you need to debit or credit something. But what is the principle? If you sell goods on credit to a customer, we all know you debit the customer, and then the corresponding entry is crediting your sales. So in that sales ledger in the customer's account, you will debit. So you go to your day book, you pick the date, okay, and then the amount involved. The details would be sales, or you can write credit sales, doesn't matter. Okay. When you are done with the individuals, you now post the total. So if you see the day books I showed you, let me show us the next one. So if we pick this book, this is purchases day book, right? So the individuals in here are creditors. So for this one, if we are posting, we have to post this individual, Araba Limited, Araba and Kwesi. We have to take them to the purchases ledger. So under the purchases ledger, we open account for Araba Limited, another account for Araba. Now this is purchases. So if you purchase from Araba, what entry would you make in Araba's account? You credit. Okay, but the total, which is 8,500, that is going into the purchases account. So in the purchases account, what entry are we supposed to pass? A debit entry, because when you purchase goods, you debit your purchases. Okay. So by way of summarizing, in the day books, you have individuals and then you have total. The totals always go into the general ledger, right? So if it is total credit sales, it will go into the general ledger, but in the sales account. Okay, so the totals will go into the general ledger, but the individuals, it depends. If they are debtors, they will go to the sales ledger. If they are creditors, they will go to the purchase ledger. I hope I have been able to explain the point well for you, Prof. Mamuzu.
Yes, sir.
Okay.
Yes, sir.
Please, any other question? Yes, Prof. Nicole.
Sir, please, can you go back to the purchases ledger and sales ledger?
Okay, so when you say go back, what specific? You want to see them again, or I should repeat the point I made there?
I want to see this.
Okay. Is it this part you are referring to? Okay, let me go up. Okay, Prof, is it this sales ledger you are talking about?
Yes, please. So okay. Please, can you go over?
I should go up a bit.
No, can you go over it?
Okay, with the postings again.
Yes, please.
Okay, so professors, don't get confused. Now, I think we are all comfortable with preparing the day books, right? So let's take that. This book you see here, this is your sales day book, right? Or your sales journal. So we all know that you put in the individual entries, and then at the end of the month, you also sum it up. That's the total. So here, if you check this book, it means we sold to Kwesi and Amma on these different dates. And this was the total as at 31st January. So when you are done with the book like this, you have to post it to the appropriate ledger. Now, the principle is that the entries in the sales journal or sales day book, we post them to the sales ledger. Why? Because the sales ledger keeps account of debtors. And these people here are people we have sold goods to on credit, so they are debtors. So if you were to prepare your sales ledger, this is how it's going to appear. Let me draw the T account. So you would have just opened a page, right? Written the name sales ledger. Underline it. Then under this sales ledger, you open one account for who? The first person, who is who? Kwesi. Okay. Now you sold goods to Kwesi. So if you have opened Kwesi's account, what will you do? You debit Kwesi. So you put the dates. The date is 1st January 2002. Okay, then the narration will be what? Sales. The amount involved was 2,000. So you also put your amount here, 2,000. Pardon me with my writings. Okay, so this is what you do. By this, you have finished posting for who? Kwesi. Then the next person is Amma, right? So you open another account for who? Amma. And Amma 2 is another debtor who we sold to. So we will debit her account 5th January 2002. The narration will be sales, and then we put the total amount there, which in her case was 1,500. Okay. Then we are done with that of Amma. Then you see that what is left is the total, right? This total, we are saying that one will not go into the sales ledger. That will go into the general ledger. So you just write general ledger or the general ledger. Nicole, I'll come to you. Let me finish the point. Okay. Then under this general ledger, you open one account for what? Sales account. So you open sales account. Like this. Okay. And you need to record the figure there. Now, when you sell goods, what do? You credit sales account. So in the sales account, we'll put the date 31st January. 31st January, because that's the date where we have this total. Okay, 2002. So let me use 02. And what will be the details? This total credit sales is with our debtors. So you put debtors there. And then the amount, 3,500. And you have done the posting for the totals as well. Okay, so if this book had been a purchases day book, it will be the same, just that the names will change. Purchases ledger. And then under the general ledger, you would have opened what? Purchases account. So in a question where you have a mixture of purchases and sales together, okay, then for the general ledger, you don't need to go and open another general ledger because you already have it there. So if you have to come and open the purchases account, you open the purchases account. If you have to open the return outwards, you open, and that of the return inwards. But the individuals will go into their respective ledgers. Okay. Yes, Prof. Nico. Let me hear you.
Sir, please, the sales ledger. Did you write sales over there because you are posting it from the sales journal, or you wrote sales over there because you're posting it to the sales account?
Okay, so in the sales ledger, the account you are opening there is for Kwesi. So when you enter Kwesi's account to read the transaction there, okay, so 1st January 2002, what happened to Kwesi? You need to give that details there. So that details is telling us that, oh, it was sales to who? Kwesi. But that does not suggest that we are opening sales account there. No, the account we are opening is Kwesi. But this is a description to tell us that Kwesi is in our sales ledger or is a debtor because we sold goods to him. Okay, so these are just details giving us. So let me take you back to double entry. If this was the normal double entry, what you would have done is anytime you sell to Kwesi, you open Kwesi and then you open what? Sales, right? And then when you sell to Ama, you open Ama. And because you already have the sales account, you record it there. So if you go that way, your sales account will have the individual debtors, Kwesi, Ama. But here, because we have prepared the day book, you only pick the total into the sales account. So in the sales account, you will not see the Kwesi and Ama like when you were doing the normal double entry, but you see the total debtors. Confusion still there, no worries. Just, I think as I explain, you get it. So if you are still confused, let me know. Prof. Nico.
Sir, please.
I heard sir, please. I didn't hear what you added.
Sir, I'm trying to get it.
Don't worry, let me help you to get it before we move on, because I'm sure others are quiet, but at least they are benefiting from your question. So go ahead with your question. Okay. Are you confused about why we have sales in Kwesi's account under the sales ledger?
No, now let's go to the general ledger.
The general ledger, okay. So your confusion is about what?
So what is it? Why have you recorded it in the creditor side?
Okay, so when you sell goods to your debtors, what entry do you make in your sales account? It's a credit sale, right? So for example, if you see sold goods to Kwesi 2,000, you debit Kwesi and you credit who? Sales account. That's why we are crediting sales account. In fact, I'm beginning to appreciate something here. If my professors, if the double entry thing, because you know we didn't start from the double entry because I got the impression that you have done that in school. But if there are issues with the double entry, then don't worry, I'll have to go back to it, because that is the basis of accounting. And if your double entry is struggling, you would, you'd have issues with all the subsequent, if not all, in fact, 90% of the remaining topics, right? So please let me get That is the impression I'm getting, that maybe we need to visit the double entry again.
Yes, please.
Okay. That is to Prof. Nicole. If the rest of you have similar issues, let me know so that, well, we can quickly wrap up with the day book, and then I'll take time for us to revise the double entry, because the debits and credits can be sometimes confusing. But to make you appreciate what we are doing, here is it. When a business sells goods, and when we say goods, it means that the items that the business is actually buying and selling. Okay, those are the things that when we sell, we can reliably say it is sales. So, for example, if the business main business or main purpose or main cause is to buy and sell, say, shoes, then the shoes are the goods. So anytime the business sells shoes, you can call it what? Sales. If the business is dealing in buying and selling of cars or vehicles, then anytime the business sells cars, you can call it what? Sales. If the business sells anything which is not the main item the business is dealing in, that cannot be part of sales. That is considered as a disposal, because then that item would be an asset. Okay. Having given you this information, my point is, anytime you see that the business is selling goods, the two accounts involved are sales, which is non-negotiable. Anytime you sell goods, sales account comes into the picture. The entry we make in that sales account is always credit. You credit your sales. And there's a reason behind it. But let's get the principle and I'll give you the reason. The corresponding debit entry depends on whether you sold the goods on credit. So if you sold it on credit, then the debit will be in the debtor's account. Okay? If you sold it and you received money, and here money can be the physical cash or it can be a check. If it is the physical cash, then we open the cash account and debit it. If it is check, we open the bank account and debit it. Okay. Now, why do we do the debit in the cash or bank or data and do the credit in the sales? Let me explain that to you quickly here, but let me get these things off. So in accounting, as you saw from the accounting equation, we have these elements which are asset, capital, liability, expenses, and income. But I'll focus on only the assets, the capital, the liability. Okay. Now, if you sell goods, which is technically known as stock, okay, stock or inventory. I think you can tell me the effect it will have on this equation. Asset equals capital plus liability. When you sell goods, so let me write a transaction here, and then maybe you tell me the effect, because it's based on the effect you can know whether to debit or credit. Okay. So sold goods to say, let me type that one so that you can follow. Please follow me well though, so that you don't get missing or you are not left behind. At any point, if you are confused, don't worry. Ask me the question. That's why you are in this class in the first place. Okay. So I'm going to ask you this. What will be the effect on the accounting equation asset equals capital plus liability if you see a transaction like sold goods for cash of $10,000? What will be the effect? Because you have done that one in school. What will be the effect? Which professor is going to give us the effect on the accounting equation? Is it going to increase asset and decrease liability or whatever? Yes, I have Abeko.
No, steps. I didn't get the question well, so like I wanted you to repeat it.
Okay, so have you gotten the question now?
No.
So we are looking at the effects of transactions on the accounting equation, which all of you reliably told me you have done in school. So you see why our first our first day was very crucial, because that was the time you are telling me what you have done in school. And based on that, we all agreed on the scheme of work. That is why I started from the day books. I didn't go to the double entry because I was reliably informed that the double entry and the effect was very perfect. Okay, Amuzu, let me hear you.
I would say, please, the assets, which may be in the form of the goods, and increase in capital, which may be the cash.
Increase in capital, which may be the cash. Okay, thank you for your version. Any other version? In fact, I would love to hear from all professors to get a better impression or understanding. Because if it is not the case that you are very comfortable with the double entry and all the effects these transactions have on the accounting equation, and then I'm taking you through, day books and all those things, that will be a bad recipe for misunderstanding, or for good understanding, I should say. So let me hear from Adam. Prof. Adam, what will be the effects of this transaction on the accounting equation? Let me go to Prof. Ben. Is it Eliha Mauli?
Sir, please, I didn't get the transaction.
Oh, the transaction is on the screen, or you can't see it.
Sir, please, is it a goods minus stock?
This is a transaction. Sold goods for cash, $10,000. This is a transaction I'm talking about.
Okay. I saw goods minus stock, that's why.
No. This is a transaction. Sold goods for cash. The goods minus is not minus stock. I'm saying that goods can be referred to the stock of the business or inventory. Okay.
Okay, sir.
So, Prof. Ben Eliha, no. Let me go to Christabel. I guess the silence means that, sir, please, I'm sorry, but I don't want to say anything because I'm not too sure. So I'll keep on moving until I get somebody who would say something. Prof. David Yampon.
So said please, for the sold goods is going to be decreased in assets. And then for the cash is going to be increased in assets, which is the cash in hand.
Okay. So Prof. David is saying that there will be a decrease in assets, that is the goods or the stock, and an increase in assets, which is cash. So that is different from what Amuzu gave, which is decrease in the goods or the stock, and then he mentioned something about capital. Yes, Prof. Christabel.
Sir, please, I just wanted to tell you if you could go over the double entry again, because we didn't treat it into details at school.
Okay. Exactly. I think that is why I have now paused on these day books, and because when the questions started coming, why did we credit sales? Why did we debit? Then I knew that something is amiss. So let's do it this way. In order not to waste anybody's time, those of us who feel that we have to look at the double entry again, please don't feel shy here. I beg you. Shyness is a recipe for failure. Let me know, okay, so that if it is not the whole class, then those groups at an appropriate time we can schedule and I'll take you through the double entry, right? If it is majority, say about 90% out of about say 18 students, about 15 are saying that, oh, say let's go back, then that one will do it in a normal class. But if about 5, 6 people are saying that, then I will schedule a time for those 5 people. At that point, if you are not part of the 5 and you join, I will remove you because then you are not being honest. Okay, so let's take the decision now. Do we have to go back to, I think probably the account, because if you want to appreciate the double entry, then you need to look at the accounting equation again, understand the elements of accounting before you can now dive into the principle, the double entry principle. Okay. So those of us who want us to visit or revise, let's see, I think a thumbs up will be, please, when you put the thumbs up, don't put it down so that I can take a screenshot to actually know those who are in favor of that. Okay, so I have 3. Is it 3? Okay. Okay. Please don't put it down. Put it on top or when immediately you click on it, it goes back. No, please. When you click, don't unclick. Click it. Because some people click and then it goes back again. Okay, then use the hands up. Raise your hands rather. I think that one would. Raise the hands. That one delays more than the thumbs up. The thumbs up is okay. So I have 10 students now. Let me take a screenshot. Okay, 10 students. So it means that there are 8 of us who are very okay. So the 8 people include Fidel, or Fidel has changed. Okay, Fidel has changed. It includes Adom Amuzu, then Eliha or Eliha. Please, if I got your name wrong, sorry. David Yampong, Dennis, Jaden Abrahams, Josiah, Justice Oheneba, and Michael Watson. These people are very comfortable with the double entry. That's fine. So to my 10 professors who I have screenshot. Hey, now, Jaden, why did you change your mind? Another person has also changed. Justice has also added. So I think I get the impression that it is all of us, okay? Even those who are good, I think it will be an opportunity for you to do revision, okay? And then ask questions where you were confused. So you see, you people did not give me a true state of things when we had our first lecture. Anyways, but I think what we have done so far about the daybooks are very okay, because when I gave the assignment or the exercise, majority of you did well. So let's keep that knowledge intact. We'll just go and polish the double entry, and then we can continue with whatever we have to do. Okay. So I think I have some 30 minutes or 45, so I can do the double entry. Okay. So I'll hold on with the postings and the cash book. Let's go and visit the double entry, and then we'll continue. Thank you very much, professors, for that. So let me close these books.
Sir, please, can we drop our hands now?
Oh, sure. Drop it. Oh, sorry, drop it. Your hands are tired. This is online hands. How can it be tired? Okay. So I may have to end the recording for this one, but I think I'll share because it has a set of the assignment to be solved. And I think when we appreciate the